lot of people to start investing in undervalued assets and also expand their portfolio and look at alternative investments. And startups are the first category that come into mind. And to discuss this topic, we've got two prolific speakers with us. We are extremely proud and privileged to have them with us. First and foremost, we have Shanti Mohan, who's the co-founder and CEO of LetsVenture, a well-known platform for raising funds. And second, we have Hari Balasubramanian, who is an angel investor and mentor. So very warm welcome to both of you on today's session. And before I start the forum for conversation, just a few quick rounds of description about their profile. Although their profile runs into pages, and I'm not going to bore you all with that, but it's my duty to give you a quick background and context in terms of the kind of audience we have today for them. So Shanti Mohan ji, the co-founder and CEO of LetsVenture, it's India's largest online platform for startup investments. It makes the process of fundraising extremely simple, easy, and efficient for both startups as well as investors. In the last 7 years since its inception, startups have raised more than 1,500 crores across 335 plus rounds in the marketplace, and it's got more than 29 syndicates, 6,500 plus angel investors from over 50 countries, and 100 micro VC funds. LetsVenture is a SEBI registered angel fund AIF and has AUM of over 300 CR. Shanti is also a serial entrepreneur, and in the last 8 years, she has been embarking on a journey to provide a complete marketplace approach to the fundraising, which is such a, I would say it's a revolutionary concept and has made lives of both startups and investors really easy. She also has a platform which is called LetsVenture Plus, which is a private platform enabling exclusive access to India's top private companies and VC funds. My Startup Equity, which is a SaaS tool for cap table and ESOP management with a built-in protocol for ESOP liquidity. And Let's Accelerate is another brand which manages corporate innovation programs and public-private incubators and accelerators under the leadership of Shanti. Shanti is also the founding venture partner for recently launched RBF fund N+1 Capital. She has worked with HP in Cupertino, California, and herself has been a well-known angel investor and with a passion to make significant impact through the startup innovation. LetsVenture is also backed by Excel, Chirate Ventures, Nandan Nilekani, Ratan Tata, Rishad Premji, and who's who in the country. So a very warm welcome to you, Shanti, for being with us. And I think we are extremely lucky here to have somebody like you to talk on this topic. We are really pleased to have you with us today.
Thank you, Kartik.
And next we have with us today is Hari ji. Hari ji is an extremely active angel investor who focuses on innovative startup teams. He has led several deals in Indian angel network. In fact, I think IEN, anybody who started with startup ecosystem in India would probably know that IEN was one of the earliest sort of guiding light for startup entrepreneurs to raise first round of funding. Hari also started early adopter syndicate 2019 in LetsVenture, where innovative startups can raise funds and get supports from investors who are also as early adopters. So this is a very important point, which we'll take up later in the conversation, that getting investors who can go beyond just giving money is an absolute bliss, right? Hari is also a member of investment committee at IIM Calcutta Innovation Park. He's member of advisory board of Ivy Cap Ventures, which is a $100 million private equity fund. He himself has been an entrepreneur and one of the earliest adopters of internet in the country, and his portal Calcutta Online, calonline.com, was acquired by a Nasdaq listed company back in 1998 when internet was just beginning in India. He co-founded OnTrack Systems in 1988. He's also the past president of TiE Kolkata, Compass, CIITA, and various other leadership positions in trade bodies. And he's a well-known figure and a mentor to a lot of startups. So a very warm welcome to you, Hari ji, today. And I'm sure we're all going to learn a lot from your wisdom and experience over decades. And I'm sure the transition which you have seen in terms of internet startups in India would be immensely helpful, those learnings. Thank you so much, Hari ji.
Thank you.
So kicking off today's conversation, a lot of people, and I'm going to ask this question to both Shanti ji and Hari ji. A lot of people think that, okay, I've got some extra capital. I put money in debt instruments, in equity instruments. And now this seems to be the latest fact. I've seen a lot of family-owned, companies, or even family offices, wealth offices of various old seasoned entrepreneurs now starting to look at why don't I invest some money in this startup scenario and make some money? But then that's a thought they have. And now a lot of people have been asking us that, is there a formal way to channelize this thought? Or like there are two alternate trains of thought. One, people think that I got extra capital, I directly invest in a startup and I take minority position and I'm an angel investor. Second thought is that, is there an institutionalized way to do it? For example, like LetsVenture or IEN is a more structured way to get into angel investment. So what is your advice to a first time angel investor who's just trying to get a hang of what angel investment is? What's the right model for them to look at without complicating and or over complicating things? So Shanti, your Hari
Sure.
sir.
Yes, yes. So sure. Thanks. I think it's a great question. So basically, if you are a first time angel investor looking to invest into this asset class, let me first start with saying that I think not investing into private markets is not an option anymore today, right? Because if you look at wealth creation, the next decade of wealth creation is going to happen from private markets, right? And if you look at, when those companies go list into public markets, the value has already been extracted from them, right? Because an early investor has already made the money. And then after that, to make money of public markets takes a much longer time, right? So private markets is a very good non-linear way of creating wealth. Having said that, it is the highest risk asset class, right? So you should be prepared to lose all your capital, right, when you get into private markets. So I'm going to qualify this before I start about it, because while angel investing has been glamorized a lot, I think people underestimate the risk of the market when they start angel investing, just because they saw stories about, Flipkart exit, they saw stories about investors making money in Ola and investors making money in Oyo rooms, right? I think all of those are the exceptions, right? There are 50,000 startups in the country. Out of that, maybe 20,000 startups are shutting down, right? And in about 10,000 startups or 20,000 startups, you'll probably just recover your capital. So this is the highest risk asset class. But having said that, like I'm saying, it is also the asset class where you can actually make nonlinear wealth, right? But if you are an early first time angel investor, what we recommend is a good practice is, one is you listen to a lot of founders, get immersed in that ecosystem a little bit before you write your first check, right? So it is always good to at least listen to about 10 to 20 founder pitches, right? Try to understand how are people looking at private markets, right? How are people looking at building companies, right? What is the vision of the founder? Try to kind of get that information before you starting to write your first check, right? That is one. Second is that always good in the first 1 year of your journey to actually participate or back one of the lead investors or one of the investors who's already been investing in the space for the last 7 to 8 years or 10 years, right? Like somebody like Hari, right? When he's running a syndicate, right? He has already been doing this for the last 10 years. And you can actually go, even on LetsVenture, you can actually go and find a lot of syndicates whom you can go back, right? So people with different theses, right? Like there might be somebody who understands consumer internet very well, that there might be somebody who might understand fintech very well, right? And they will actually typically tell you their thesis. They will also tell you their existing investments. They will talk about the IRR they have created. So it is a good practice to go and follow some of these lead investors when you start your journey as an investor, right? Because then you are backing on the intelligence of the people who have already been investing in the marketplace. Third is, of course, to always evaluate the startup a little bit based on your own understanding and thesis, right? Because, every investor also has domain expertise, right? Every investor also has something which he can give back to the founder, right? If you can start mapping up, how can I help the founder, right? And over time, how would I have decided if I were to evaluate this independently? So like, I was in a panel discussion last week, and one of the lead investor said, if after 1 year you're not still able to make up your mind in which startup to invest in, and you're continuously looking at other people, it is not a very good sign, right? Because somewhere you have to start owning your decision making process, So those would be the three kind of high level parameters, but I'll let Hari also add to it. I don't want to keep talking here and
can you hear me? Yeah.
yes.
See, in my opinion, there are three types of people, who can become angel investors. There are some very smart people who don't do all the dirty work or the hard work, which typically an active angel investor does. What they do is they just piggyback on the right people and they ride. So they don't have time. They have a checkbook and they want to put some money into this asset class. So what they do is they take away some money and just keep on putting, once in a while they start putting some money into this asset class. That's one type of I would say category of people who are smart and who know that if they have to engage and make money in this asset class, they have to put in a lot of time. So instead of doing that, they just follow a leader or follow somebody who leads and who has got a track record, and that way they are able to actually enjoy participating in the asset class without actually going too deep into it. So there are some people very smart like that. There are some other people who are always who want to be an angel investor, but they can't decide. They want to do things, they want to talk to founders, they are they are knowledgeable, they keep on talking to founders, but they are not able to close deals with the founders, primarily because there is something which is holding them back. So these are people who keep talking on the sidelines, but take a very, very long time to actually take a investment call, investment decision. They also, when they typically don't follow other angel investors also, primarily because, they have their own thesis and they think that, this could go wrong. So there is one class of people who are always the doubting Thomases, who want to do it, but are really not able to do it because they are just waiting and watching, thinking that the best opportunity is going to come. And then there are some people who are very passionate about helping entrepreneurs. There are typically entrepreneurs who have gone through this whole cycle of building a company or starting something innovative. They know how painful it is to, run a startup right from scratch. They know that so much of, battles have to be fought, in this whole journey till you are recognized. So they are people who are very passionate about helping entrepreneurs in whatever way it is possible. And typically, there are a very large number of people in India now who have been entrepreneurs and who understand this journey of entrepreneurship. And they tend to back entrepreneurs just because they like the project and they like the entrepreneur. So there are, I would say, these three types of people in general in the angel investment class. Many people who want to begin, it's better for them to learn from others. But if you really want to enjoy angel investing, you really have to take a deep, I would say you have to go deep and work very closely with founders. That's what I do. It's just not about making money. It's about making things happen. It's about making a difference, right? So there are many people who are very smart, who just make money. For them, making money is the primary objective, and they follow various strategies to do that. So it depends on what type of an angel investor you want to be, a smart one or a hardworking one like me, or you just want to wait on the sidelines and see when you can actually grab something solid.
Right. But tell me something, Hari and Shantiji. A lot of people say that people typically have expertise or exposure to equity markets where there's a lot of information, research material available, where they can piggyback on, right? And multiple points of view are available. But in this asset class, as you would imagine, the information is purely based on the conversation with the founders, and founders are extremely passionate about their business, and we all understand how those interactions go. So a lot of people are really hesitant, especially the ones with the old money, right, who want to get exposure. They are not able to evaluate it properly. Sometimes there's also this technology arbitrage, like I've got money, I want to make money, I understand that there is risk and everything, but I simply do not have the know-how to be able to really understand what's going on in the business, and there isn't enough information available in the public domain which I can make sense of. So how do that challenge of know-how or capability gap and also the information arbitrage, how do we solve that?
So I
see, yeah, go ahead, Shanti.
No. So basically, I would disagree that you don't have information when you make investments into private markets, right? So you are not investing into a private company by looking at public sources of information. That's exactly what LetsVenture does, right? In LetsVenture, the founder comes and creates a profile of the company on the platform, And the profile will include information like team, market, traction, what are their financials, right? What is the competition look like? What is their investor deck? Everything will be available to you before you make a decision on investing into the company, right? But the access to that information is curated. That is, the investor is curated because before he's allowed the invite to the platform, because we also work on protecting information on behalf of the founders, right? You don't
And
want
this information, sorry, is validated, right? Like you will vet the
validated.
financial number. Okay.
Yeah, it is validated, right? So one more thing is, when I say validated, right, I want to qualify that validation, right? So the way it works is that when you go on LinkedIn, and I'll give you a simple example. When you go on LinkedIn and create a profile, right, who is validating it? Your social network is validating it, right? Because you know three other people, right? And three other people will say, man, this guy never went to my college on this batch, right? So how is he kind of putting? So you don't, this is I mean, the social network works in validating your information, right? In the similar way, when companies are creating a profile and putting up information, there are always investors who will know somebody or the other, right? So from that perspective, the information is not validated at the time of profile creation. It is validated when an investor commits money into the company. We do due diligence on the company, right? So we do financial due diligence and legal due diligence, right? To verify that whatever information has been put up on the site is authentic, right? So I would say that, the myth that private markets don't have information, right? You have to just, know about the company and just go put money into the company is completely false, right? You have access to information on the company when you're investing into the company. People are willing to open up their financial balance sheet. They're willing to open up all their information on customers, right? Because they're raising capital, right? So they're raising anything from maybe 3 crores to about 10 crores for their early stage round, right? And if you look at the differences between public and private markets, and just kind of let's take it on 3 pillars, right? There is one pillar on portfolio, which is a very similar concept in public markets, right? Public markets also talks about portfolio creation, right? Thesis and portfolio based. You don't go and completely put all your money into one sector, right? Typically, even in public markets, people are diversifying, right? That's why you have different products which allow you to diversify. The second, of course, is risk reward, which is also there in private markets, also there in public markets. And third is access. While in public markets, access is open, in private markets, access is open only to accredited investors. So they are very similar. This is a myth that it is an information arbitrage, right? It is not. And you can ask Hari, right? He will not go right or lead the investment into a company without knowing the founder, without going through the details. People even go to the offices and go look at the products, look at the warehouse before they actually go write their check into the company.
Right.
Okay. So I will start by saying that the Indian investor, the public market investor, is the biggest VC in the world. He takes the maximum amount of risk. He doesn't know a sector. He just works on hearsay, right? So if all of you will agree that there are lakhs of people who just put money because somebody said, buy this stock, it's going to go up, right? Whereas in angel investment, it is much more safer than the typical investment decisions which the Indian public take. So in my opinion, startups are all about discovering business models. So you cannot find information that a public company would publish in their website with a startup because they don't have an operating history. So startups again are of various types, right? So when you look at very early stage startup, which means the company is just from 0 months to let's say 24 months, they don't have anything. They are just pitching on a hypothesis that this is going to work and there is a market for such and such. So what validation can you do? So it's all about a discovery process. Now, the type of startups which get invested in is how bold is the vision of the founders? How clear is their vision? How do they understand that, there is a process of actually discovering your business model, and they are absolutely conservative in terms of their, cash burn and other things. They know that they have resources and time, and they need to play that very optimally to actually discover their business model. So when we see such teams or when we see such founders who exactly understand that, they are playing in a space which is absolutely unknown, or they know that this is a known space, but they are going to disrupt that space, those are the type of, I would say, themes which appeal to angel investors, where if you put your time and energy, you can look at making a multiple of 20, 30, 50, 100 times, or maybe more, over a period of time. So angel investing is about being patient. It's also about understanding that it's all it's totally an unknown area for the founders as well as you. If the founders were doing well, they were churning money, every investor will back them, right? So this is not the case in startups. Startups are always about unknown things, and they operate under the extreme environment where uncertainty is the only factor that they have to deal with on a day-to-day basis. So you can understand, when you have this type of a situation, there's a lot of fun. It's an adventure, and if you find a good team who are actually cracking a big problem, the journey is a beautiful journey with a lot of fun. But that happens not with every startup. There are many startup founders who get tired very quickly, or who just want to raise some money and feel that, oh, they've succeeded. So it's all types of people in the market. There are many people who learn. There are some people who don't learn even after making mistakes, right? So it becomes a very good, I would say, it's a talent to actually evaluate good startup founders and back them, and also understand that you're going into a domain where the risks are very high, so the rewards are also very high, and you should be able to write off your money. So public markets and private markets, I just cannot even compare, because there everything is known, right? For example, you have to have predictable revenues declared, and when you reach that, the market discounts you. Here, nothing is predictable till they actually have a business model which can scale.
Right. No, absolutely. In fact, Hari, I just want to build on a point you mentioned where, you almost have to, be on this journey or adventure with the founders and the team. So a lot of first-time angel investors I have seen, they tend to also get a little bit more, they poke their nose around the business as well, because sometimes they come from that domain, that industry, which is partly a good thing, but sometimes there also leads to a bit of a conflict between the founders and the angel investors. So how much getting involved in the business is the right amount, and how do you make sure that you let the teams also do what they're doing and not get, and also help me understand, in case of a model like LetsVenture, we've got multiple number of angel investors who work as a syndicate, then that becomes even a bigger problem for a founding team to manage. And as an angel investor, let's say if I am piggybacking on Hari, Hari with his clout and understanding can drive decision, but I am just like a nobody piggybacking on him. So how do I still ensure that my say is there, or those issues do not happen?
No, they don't happen, primarily because, you have to understand that everybody, see, the first and foremost thing you as an angel investor have to start is, you have to start afresh, as if you don't know anything about anything, right? The moment you start using your experience, you kill innovation. Because, I've seen many people trying to impose a model which worked for them on startups, and, the startups initially, they're very nice, they can't protest, but over a period of time, the relationship becomes bad. They tend to ignore the investor, but just respect him because he's a lead investor. So it's very, very important for you to build your chemistry with the team. So it's very interesting that, if you are very good, then the team starts leaning on you. For every decision, they'll come and ask you, sir, can I do this, or shall we do this? Right? So you have to tell them at the right time, saying, no, it's your decision. This is my view, but the decision has to be the entrepreneur's decision. Any angel investor who wants to impose his decision on a startup, you can be rest assured that that chemistry is not going to work. It is the entrepreneur who has to drive. He is the driver of the car. We are all sitting behind and telling him, hey, take left, take right, but he is the person who is actually having the wheels in his hand, the steering in his hand, and he has to drive it. And we cannot do backseat driving. It's impossible to actually get things done. But what happens is, founders are again of very different types. There are various types of founders. There are matured founders, there are immature founders, there are founders with a lot of ego, there are founders who are very quiet, there are founders who talk too much but don't deliver that much. All types of people are there. So you really need to have a controlled mechanism where you're able to evaluate, at the same time have a very transparent engagement with the founding team. So for me, the team is very important. So it's just not the founder who matters. The founder and his team are very important, because the founder alone can do only that much. The team is also very important. So I would say that you're absolutely right. Many angel investors, overstep their what should I say, the expectations that a typical founder has. The founder feels claustrophobic many a times with investors. That's why it's very important for you to choose the right type of investor. So if you choose a wrong investor, your life could be a mess. And I have seen this happening with many founders who have just gone and taken money from anybody and everybody, who doesn't understand the process of systematically working as a startup and building a company.
Yeah, so just want to add to what Hari said and to just respond to your question, Kartik. In LetsVenture, now the model is much better. Because of the syndicate model, everybody is going as one entity on the cap table. So actually, from the founder perspective, that investor might interfere or might kind of create trouble, which there are about 10% of investors who don't understand like exactly what Hari is saying, right? They are not compassionate, they do not understand, their just ability to stay patient is very low, right? They will create trouble. And I think that happens. I think that is always kind of given. But you now cannot hold up any operations of the company because you are sitting behind a syndicate, right? So you're sitting behind the AIF, and the AIF is like one entity which sits on the cap table, which is managed by the lead investor, right? So actually today it is much better than what it was probably 3 years back when we did not have the AIF, where every investor now sits on the cap table, right? And I've seen founders, right? There is one investor who's left the country and gone away, and nobody could trace that investor or find the investor. We just don't know where he's gone, right? And there is a paperwork being held up for the next round, right? So all of those challenges are today gone, right? Because it kind of sits on the one. And the other point is, I think there is a very thin line between advice and interference, right? And I think, investors have to keep that in mind. Like what Hari said, I think he described it very beautifully, that we are sitting in the back seat while the founder is the one driving the car. This is not an autonomous car, right? So just still the founder driving the car. So you have to kind of be there without overbearing on the founder.
Right. And closely related to this is also, a lot of people, have asked me that, what's the whole deal about statutory compliances or taxation related issues? A lot of people are nervous about new regulations which keep coming in. Is there a role which SEBI plays in it? Do I have to register with somebody? How does it impact? How does my holdings impact on any, tax structures based on, whatever tax filing I am supposed to do? So is there any implications or to-dos in that sense?
So today there is an angel tax issue which has been discussed a lot, and founders and investors get notices from the tax department. But that only happens if you're not a DIPP registered startup, or if you don't have an institution sitting on your cap table, right? And because LetsVenture has an angel AIF, by default, we are an institution which is sitting on the cap table. So that protects you from angel tax for the founders, right? In terms of companies raising funds and not doing a lot of compliance, governance, GST filing, all of that gets captured when we do due diligence before we do call for money. And those clearing those compliances becomes a condition precedent before we go call for money.
But as an investor, am I also liable for some of these non-compliances?
Yeah. If you're a director in that company, right? If you're a director,
only if I'm a director. If I'm a shareholder, then
shareholder, no, I don't think so. But Hari can add to this.
See, as a shareholder, now what has happened is all, we have this ITR, I think 4 or something. When you file your tax return, you have to make a declaration of all the unlisted companies holdings that you have got. So in your income tax return. Now that used to be, we never used to declare what shares we hold in private companies before, but the government has now become very smart. So what they do is you have to list all your shares,
yes,
which are private, right? And then what happens is, when there is an exit or something happening at that time, you have to show that there is an incidence of capital gains on account of that particular share. There are also incidents where you write off, which means when you have a capital gain, you also book losses, where you take a loss in your capital so that you can offset the long-term capital gains or short-term capital gains, whatever you have got. So the only area where you have to, so what it primarily means that you have to maintain now complete information about all your holdings, and you have to disclose them in every year in terms of what is the change in holdings. So there is no hiding of facts anymore. Now most people find it very difficult because you have to produce information like what is the PAN number of the company, TAN number of the company, so many information, right? And so if you are a holder of, let's say, equities in 50 private companies, so that's a initial grind for you to get all that, right? But now everybody has become careful. They've understood that all these are required. Now it's available. But for companies which we have invested, let's say 10 years ago, which are no longer existing and for which we hold shares, those also are our responsibility today, right? So we keep holding shares, not knowing the PAN number of the company. All these things are a real ticklish problem for investors. But slowly it is getting turned. So when you have a capital gains loss, that is when the income tax department starts fingering you. They say that you bought this share for 2,800 rupees, you are selling it for 1 rupee. How is that possible? So it's a different type of a problem at that time. You also say that, see, that's the thing, this is a share purchase agreement, you see that we have done this. That's one. The other thing is there are many cases founders just vanish. When I say vanish, they have shut down the company, they are not there. Now you want to transfer your shares to the founders itself for 1 paise. They are not there to buy it, right? But it's sitting in your this thing, you are not able to book capital gain loss. So these are some of the issues which we have faced and we continue to face. So now we are very careful in terms of what type of founders or what type of people we are dealing with. So these are all very, very important tick points for any angel investors. And
so these are available somewhere, sir, like as I don't know.
Huh?
I mean,
no.
or only lots of experience and
no, these are all practical things which you face, right? When you are in the game, right? So you face situations where all these type of things happen. The other thing is, as angel tax is also something which has been it's been like a ghost, keeps coming once in a while. Founders are terribly upset when such and such demands are placed. A company has not made any revenue, suddenly there is a demand of 30 lakhs on the company, right? So founders get absolutely ruffled during those times. But now we have seen all that. We have a way of handling it. So any problem is not a problem. Only thing is founders have to be advised properly. There are a lot of advisors who provide wrong advice, and that actually misleads a company and founders get into a loop and make one mistake after the other. So the problem becomes compounded. So I think going to the right person is very important when you're seeking advice. For example, it's like this: you've got a problem in your stomach. Now you go to a doctor who doesn't understand that, he gives you some other treatment. So what happens is you have your main problem is not solved. You now pick up an additional problem. So those are types with things which founders have to be very careful about. They really need to understand that ultimate decision is theirs. So anybody can tell them anything, but they should be able to take their own decision, and they should be helped in terms of equipping themselves so that they can take their own decisions in any circumstances. So even in tax, if we say, if the tax expert says this and that, the founder should be logical in terms of asking, okay, why this, why not? And he should check with other founders, hey, what are you doing about this, right? So that actually opens up a lot of opportunities to explain the reality. Ultimately, if they follow the path of truth, which means whatever is true, if they're able to follow that path, they will be able to get a solution to any complex problem. So I would say that, there is a lot of complication, but things are becoming easy as we have more and more regulated entities like, AIFs or, venture funds and things like that. They're all regulated. So the paperwork has to be absolutely 200% pakka. Otherwise, they will run into problems. So that's one safety net, it's like mutual funds, right? So if you invest in a mutual fund, SEBI regulates the mutual fund. So, you can assume that there are a lot of things which are taken care of, though there are plenty of leaks in mutual funds as well. So I would say that founders have to be extremely cautious because there is always a changing landscape of, compliance. So they have to be on top of that, which becomes an extra burden on founders, especially technical founders, because even chartered accountants today don't understand, what type of laws have changed and what they need to do, because they're all practicing something, but they can't give you answers for everything. GST has become so complex, or was so complex, and everybody had their own opinion. Only now it's sort of settling down. So there's always this transition problem when law is enacted. And in our country, we keep changing laws very frequently.
Great. Tell me something, Hari and Shanti, that, as an angel investor, let's say you get invested into a company and then the company starts to do well and then they want to go for the next round of funding. you got multiple routes, right? Depending upon whatever term sheet or SPA you had, you may be there to get involved in subsequent rounds, or you may take an exit. So how do you maintain that discipline? Sometimes people also tend to get too attached and they want to invest more and participate in subsequent rounds. Or as an angel investor, it's important to keep the discipline that you stepped in as an angel investor, and then in Series A, typically you tend to exit and then support more startups. So is there a thought process or formula for that, or anything goes?
No. Angel investing is not, I mean, while, we all talk about, the fun of angel investing and, being able to work with entrepreneurs, I think at the end of the day, you have to make money to continue to be an angel investor, right? So let's not forget that, right? And I think it's unfair to tell the angel investor to exit at Series A, because I think, see, out of your 10 investments, maybe 4 will go to Series A, right? You want to double down on your winners, right? So you want to go invest more into companies you think are going to do well, right? So I think it's a very personal thesis in how you look at investments, right? And sometimes, suppose from an angel to a Series A, the valuation has multiplied like 6 times. For you to even maintain your pro rata on that, I mean, you just have to maintain your equity holding. You might have to invest a little bit more and exercise your, your pro rata in that company. I think it's perfectly fine, right? Typically, what people say is that you should. So and this has been a very interesting conversation, and I've spoken to a lot of investors. And how do you think about exit, right? So what people say that if I think the company in the next 5 years, right, is actually going to probably go up in value, maybe like another 50x times, because you start sensing the space, start sensing the founders, right? You know what is the interest in the space. I will then stay put. I will not exit, right? Because my probability of making probably a 200x return in 5 years is much higher, because I'm seeing that trajectory going there, right? However, if I think that this company is now not going to be able, like they've really struggled to raise their Series A, right? And they are not going to become a very large company. Their probably value will cap in 30, in about like probably like 10x times, right? I will then probably think whether I want to do a partial exit where I exit my principal and I still leave the rest of the money behind, because in case the company turns around, I still can make money, right? So I don't think that, you should exit in the series. I mean, nobody exits in the Series A, one, right? Second is, there will be no one to buy you out. Even if you want to exit, nobody is going to buy your shares out, because the incoming investors typically want to invest money into building the business. They don't want to invest money into making you rich, right? So there is a difference, right? I mean, even the incoming investor is actually coming in because he wants to build value into the business, right? So exit thesis is very, very personal. It also depends on how much capital more you have left to play around with, right? So there are a lot of factors which kind of define that. But we have increasingly starting to see a lot of investors define a very clear thesis, saying after Series A, every round I will exit 50% of my holding.
Okay. Interesting. Hari, any thoughts on that?
Absolutely.
Or are you still invested in all
No. I'll tell you. See, having been a lead investor, my primary interest is in ensuring that the startup actually succeeds. That's my primary interest. Now, if the startup succeeds, only then investors win, right? We cannot win at their loss, right? So I personally believe that the startup has to succeed, right? So if a startup has to succeed, it is like this. If you're going to an airport to catch a flight and you live in a village, you may have to take an auto rickshaw to come to the bus station. And then you come to the bus station, you take a bus. Then you come to another particular, center, and there you take a cab and go to the airport, right? So a startup journey also has got number of vehicles, especially in the form of investors. So in some cases, you take a bus. After that, when you go to the airport, you take a different type of vehicle, right? So at that time, you don't think about the bus. So we have to be very flexible in terms of, what to do when an opportunity is there for an exit. So personally, I have forced all my investors to exit in several cases, primarily because that is what was good for the startup at that time. Or the incoming investor I brought in, he said, I want a very clean cap table. I don't want so many angels sitting. I'll buy you out, right? But I'll do this deal only if I have all your holdings plus whatever I'm putting into the money. So there are investors like that who want to have a majority stake in the startup, and want to clear out the cap table, which means they don't want anybody else. They and the founders will now drive the company. So there are instances like that. There are instances where there are multiple investors, which means, let's say, LetsVenture, IAN, ABCD, XYZ, there are 4-5 investors. And the startup founder has got so tired getting papers signed from all of them, because any document, any decision that he has to take, all the shareholders have to sign. So in one cap table, there are 50 angel investors. In another cap table, there are 2-3 institutional investors. There are some funds. So for one simple document, it takes it 2 to 3 months to get it signed, because people are traveling, or somebody is asking, oh, why should I sign this? There are investors who ask questions why they should sign this document and why this clause should not be removed. Now again, you have to go back to all the investors and tell them this clause needs to be changed. So it becomes very painful for startup founders, especially when they're dealing with multiple investors who really are not of the same class. So in several instances of mine, I have forced my investors to leave, primarily because another lead investor from my group was creating too much of trouble for that company, because he wanted a board seat. I said, okay, you take a board seat, right? But in the board, he was creating too much of problem for the startup founder, and the founder came and said, sir, kuch bhi ho, sir, aap in log sabko nikal dijiye, mera jeena haram ho gaya. Ek paper sign karane ke mere ko 2 mahina lagta hai, right? So, in those type of cases, I saw that, no, we are not doing the right thing. So I forced all my investors to exit. In certain cases, the most equitable thing is to do part exit and sit quiet, which means somebody else has now come, he's going to drive, or, private equity has come. So the private equity is more competent in terms of, giving the right type of, support to the startup. So at that time, we need to step back. So if you get an exit, you step back and allow them to move forward. So if I'm a lead investor, typically I would work very closely even after a private equity comes. If the private equity tells me, boss, enough is enough, I just step back. Or the founder would say, sir, aap rahiye, sir, wo log to hai, like, you at least help us in the transition. So I'll do that. So as a lead investor, the decision making is totally oriented towards how the startup can succeed. As an individual investor, I'll always see, how quickly can I take my money back, right? So I love exits. And my target, after almost so many years, I look at doing at least one exit in every year. That's a target which I set to myself every year. You must do at least one exit where you can see a 5x, 10x type of a multiple, so that you're happy and you can redeploy the capital. At the same time, you have some money, you have some change which you can spend. So I love exits, and I want to do one exit a year, and I've been doing it consistently for the last 4 years.
Wow. That's, I think, good news for a lot of people who are listening here, that there are exits and there are success stories. I'm going to now take few audience questions, if that's okay with you. We got last 10-15 minutes. So a lot of people have asked this question, that what's the minimum sort of a ticket size to get into this sort of an angel club, or even to a platform like LetsVenture? Is there like a minimum capital you need to set aside, or there's nothing like that?
So the regulator has defined this, not me, right? Okay. Which is actually a good way to look at it. So angel investing is not for retail investors. Let me say what it is not, right? Okay. And the way SEBI defines it is that for you to be an angel investor in an angel AIF, you need to be an accredited investor, which basically means you have to have a net worth of 2 crores outside your primary home, right? Okay. And then you have to commit to investing 25 lakhs over 5 years. So if you break it down, you can say 5 lakhs a year, right? So those are the requirements. Typically, through the angel AIF also, we don't allow people to do less than 2.5 lakhs per startup, right? Because you don't want to have a lot of smaller kind of players. You can, of course, directly get onto the cap table of a company. I don't know, very good founders don't typically allow 1 lakh, 2 lakh check writers, right? Because it's all over time. It all becomes a point of governance, right? A lot of work has to be done by the founder to maintain his shareholders on the cap table.
Right, absolutely.
Yeah.
So I look at it in a slightly different way. I think we have got a lot of young people who are making a lot of money, and they don't want to invest in stock markets and mutual funds and things like that, right? So they are smart. They also want to become startup founders. So I would say that if you can set aside 2.5 lakhs to 5 lakhs a year, and if you're, let's say, in your early 20s, got into a good job, I think this is one of the best asset class that you can invest, and where you can retire at the age of, let's say, 35 or 40. So all you need to do is put at least 5 lakhs a year for the next 10 years in absolutely risky investments like startups. And even if one or two can give you a 100x return, you are saved, you are done, right? So I would say invest at least 2.5 lakhs to 5 lakhs every year consistently for the next 10 years in this asset class. You will never regret it, because you would make you would make so much money that you cannot make in your job also.
Right. And I've got one question from, I think, my dear friend Kana. He's asking that, is there a mutual fund kind of a model for investment? Or is it still far off?
Actually, it's a very good question, because I have always thought that in India, as I told you, every individual in India is a venture capitalist. They take so much of risk. You take Satta Bazaar, you take betting, you take stock market. They love gambling, right? Whereas this is not gambling. So I would love to have a asset class which is like a mutual fund managed by people who are who understand this asset class, and allowing people to put even 1,000 rupees, right? We can actually pool all these monies and actually take investment positions in this thing. So I wish, the regulator is, allows us to create an angel fund in the lines of mutual fund, where even a 500 rupee SIP can come into an angel fund. So you can become an angel investor or participate in an angel investor, even with 5,000 rupees of annual saving. So I would love to see that the total amount of money that could come into the startup ecosystem will be humongous. It would be a few $1 billion just from this asset, just from these investors. So in India, if you have 1 crore investors and each one puts in about 5,000 rupees, that's a lot of money to actually, fund startups at an early stage. It's not there, but I want to see it happen. And whenever I get a chance, I say that, why don't we do this? It's a great idea.
Right. And what do you think about this? A lot of people now buy ESOP pools of private companies and then resell it and do off the shelf, buy and sell of shares in private companies. And how do, as angel investors, you can participate in that ecosystem, or is it frowned upon, or do people like it?
See, in India, everything is traded, right? So if you can trade, if a crow is going to shit here or not, so you can understand that ESOPs can also be traded, right? So I've also received many opportunities to invest in some companies. Privately, somebody is selling those shares, right? But I really think that ESOPs typically are, something which the company has to manage to get sales. So there are many companies which offer to buy shares held by employees at a discount in most cases. So it creates a good sort of liquidity for employees who are holding shares. But overall, I would say that it has to be managed by the company. Anything which is not managed by the company could be a problem.
I agree with that, with what Hari is saying. I think when you are buying ESOPs in the gray market today of private markets, please keep away from it, right? Because you don't know if what you're holding is right or wrong. Because private markets, there is a stack in the ownership, right? So there is a ROFR. The company has to actually go to their board, get the ROFR. When actually somebody changes shares, right? When the change of share happens, right? The company has to give consent. Now, if you have not got the consent from the company, you don't know if you're holding a legitimate share, right? So I would completely keep away from that. In fact, LetsVenture is working on a solution where we actually work with the company and we create liquidity solutions for ESOP. But it goes through a very, very structured process. So we work with the company, we get approval, we go take it to the board, we get approval. They then allocate how much ESOP can get liquidated, right? And then that comes to us as an allocation. So if an employee is directly coming to you, it is not legal yet in India. You can't do forward trading of shares in India, by the way, right? In the US, you can do forward trading of shares. In India, it is not allowed.
Okay.
So you have to be careful on regulation, right? So I think one thing what people have to remember is that there is no shortcut to trying to do things in private markets, right? You have to go through the proper regulatory frameworks when you work in private markets, because this is large money at stake, right? Which is again very high risk, right? So you want to make sure that you're not breaking any of those legal kind of definitions when you're trading in private markets.
Fair enough. I think that's a good learning for all of us.
Yes.
One of the questions which Bimal is asking is that what are some of the good places to hang out if you want to become an angel investor? I know LetsVenture is a good platform to be on in good company. Any other forums, any other events, chambers of commerce where you can just hang around and maybe overhear Hari investing in a company, and then okay, that sounds good. Are there any such forums where people can involve in?
We should actually create we should create an angel investor hangout.
See, I think Clubhouse is a great place to hang out and listen to startup founders, angel investors, and things like that. So I think Clubhouse is a great platform to actually go and see, and it's global, right? So you can see US, India, many other countries. So I think Clubhouse is a place where you can just go and listen and see what's happening. Other than that, electronic, media has got plenty of things which are happening all the time. You can register for events, and now that everybody is working from home, a lot of online opportunities to hang out, interact, ask questions. One of my startup founders was thrilled. I actually introduced her to Clubhouse, and she hesitatingly, came into Clubhouse. And one day she just popped in. She saw Guy Kawasaki having a session. So, and the session was almost over. So he asked, I'll ask one last question. I'll take one last question from a woman. And she raised her hand, and because of her name, he liked that, and he called her and asked her what is the question, and she was thrilled. She said that I was able to ask a question to Guy Kawasaki, without knowing anything. I just entered a room and I was able to ask. So that way, there are platforms where you can actually talk to some of the best people in the industry who know their game, and you can also hear others talk about it. So plenty of opportunities. Only thing is you need to know what you want to find, and the internet is there to offer it on a plate.
Right. And do you also believe that, like a lot of people say that there are pan India level angel funds, and then there are regional funds? I know now there are a lot of college funds as well, like alumni are pulling in money, Ivy League funds. So is there also like a sort of a fund of fund approach here where you can allocate money into different groups, or do you advise a more sort of a linear approach? And all this is for new angel, not seasoned like you, for sure.
So fund of funds is like a really rich guy, no? He has like a lot of money to throw around into.
A little bit of money being thrown around.
A little bit of money to nahi hoga na, Kartik. You have to put, like when you go into funds, you have to put 1 crore, right? That's the minimum corpus you put into each fund.
But
right?
like you said, 2.5, 3 lakhs. So if somebody wants
No. This is on a single startup.
Oh, single startup.
Yes. And when you look at fund, it is like a fund which will then invest into multiple startups.
Right. So if somebody wants to invest in one fund, they need to have per annum 2.5, 3 lakh per startup. But there is no minimum capping on number of startups to invest in.
No.
Okay. Understood.
See, you should build a portfolio of 25 or 50 companies over a period of 10 years. By just putting a small amount of money, if you can save 5 lakhs a year and put it into this asset class. So we are talking about a 10-year journey. So we are talking about a young man who is 25, who will retire by the time he's 35 because he's made enough money because of this asset class. That is possible. So every year you put 5 lakhs, invest in, let's say, 2 companies or 1 company. Some years you put 3 companies because you're getting good deals. And over a period of 10 years, you've got a portfolio of 30, 35 companies, right? So what will happen is in the first 3 years, 4 years, many companies will die, but some companies will give you 100, 200 times return, right? So that return you can just sit pretty for, from a money point of view. So I would say that young people should straight away go into this asset class, because what can a bank deposit give you? And stock markets are all, I would say they're too heavy, and, you can't really make much money in the stock markets unless you are deep into it, in the sense, unless you are studying it or you're putting money into mutual fund. Mutual fund is a good asset class, in my opinion, for young people. But this is an asset class where some money, if they are able to put in, they can get windfall gains. But they have to actually work on it. They have to like doing it. They should be following the right type of people, right type of groups in order for this to happen.
Understood. So we're almost out of time. I'm going to request both of you a quick 1 minute parting advice to all the budding angel investors, just a parting 1 minute thought which you want to leave behind.
There is no better time than today to start angel investing. I think we are really seeing very good founders come. I think last decade was very different. This decade, the quality of entrepreneurship has gone up. Kinds of people who are actively investing has gone up. There is global capital coming into the country, right? And the market is ready today for larger products to be launched, right? Like with Geo and with mobile penetration, the kinds of products which can get launched in India is huge, right? India is also seeing a lot of global products getting launched from India, right? So really this decade is going to belong to the Indian entrepreneur. I'm so believing that today when I see the founders. And there is no better time to write that than to be an angel investor if you don't want to be a founder.
Great. Hariji?
I would say that, India is a country full of problems. So where there are problems, you have got enough opportunities. And today, Indian problems are of a global scale. So I would say that, we have an ecosystem where there are very bright young people who are thinking out of the box, who are coming up with amazing solutions which are world class, right? And today India has been able to prove that they can build products in 90 days. They can build, something absolutely disruptive in a very short time. Now, this really requires the support of the ecosystem, and the ecosystem is going to be rewarded for that. So I would say that the number of angel investors India should have even today should be nothing less than 2.5 lakh to 3.5 lakh angel investors. But unfortunately, we have only 10,000, or maybe I do not know the exact number, but hardly 10,000 angel investors. So the country can actually bring in. So the more the angel investors, the more is going to be the robust market. The more startups come, the large corporates, Indian corporates, the large corporates are one of the worst performers for the startup industry because they don't do aggressive buying of startups. So if you see the US market, for example, if you take a Cisco has acquired so many companies in their in their journey. Every other company, Facebook, Cisco. So when Facebook acquired WhatsApp for such a large amount, a startup which had just about 10 or 15 people, right? So Indian companies do not do that. Indian corporates like to have a big bank balance in their balance sheet, and they want to show that they've got so much cash. That has to change if we really need to have a much robust ecosystem. So I would say the more angel investors come, I would say the Indian corporates will also change. They will also start understanding that they cannot just survive with their own old conservative thinking. So the corporate has to be moved, and that can be moved by angel investors. If a few angel investors stand up, corporates will start thinking, oh my God, we're going to lose this opportunity. So I would say that there is a need for having at least 100,000 angel investors very quickly. And if 100,000 angel investors put in at least 10 lakh of rupees a year in terms of their investment, you can see the amount of money which will come into the ecosystem. So the money will be available, but it will be available only for very bright ideas which can actually really do disruption globally, right? Because globally companies are interested, and we have several examples of Indian entrepreneurs, creating world-class products and getting acquired, right? I've seen it in my own life in the last 7-8 years as an angel investor. I've seen so many young founders who have really created world-class products, and today the who's who of the world actually talks to them for investment. So I would say that it's a great time, and people should learn that they must take calculated risk. The market is just right.
Great. And I think for me, one of the biggest takeaway from this conversation is that if you're a 20-something, do not think that angel investing is only when you have made big money and then you have to think about it. You can start immediately looking at it almost like a SIP approach which Hari is talking about. I think that's a great way to think about it. And everybody should look at this investment class and start building a portfolio and take a 5-10 years horizon and build a portfolio of 10, 15, 20 companies and do your research well. And then of course you've got platforms like LetsVenture, which Shanti runs, and they'll do everything for you from due diligence to any kind of information and support you need. So I think between the two of them, you've got the right information set, processes, and a toolkit available. So just go out and become an angel investor today. Sky is the limit. Thank you so much, Hari and Shanti, for sharing all these candid feedback and inputs and your wisdom. I'm sure all this crystallized into 1 hour of Power Pack session is really helpful and well appreciated. Thank you so much for sparing time with us and being with us today at IMA Young Leaders Council. We express our deep gratitude to both of you.
No, Kartik, you were a great moderator, right? You asked
Excellent. Yeah, you asked the right questions, ended in the right time. So
Yes,
fantastic.
you actually were very good with the questions you asked and the way you moderated it. So thank you for having me here.
Thank you. And thanks everyone for joining in. Special thanks to the entire IMA team. Dr. Raj is here with us, Rajni, Sanjay ji, and of course, Rekha ji and entire secretariat. Thank you everyone. Stay safe and have a great weekend. Thank you.
Thank you.
Thank you.